Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the Forex market. So yesterday, as you know, it's a very important event has happened for all people. Actually, Pfizer has announced the vaccine on the virus, and that really has changed the price action on many markets. So on the Forex market, it was mutual effect because, well, it mostly stands in relation to the United States dollar, but on the gold, you consider it was really outstanding collapse. As well on the stock markets was significant upward action. So although on the euro currency mostly everything goes well with our trading plan that we said, so recall the scenario that we discussed, somehow market could try to hit XOP on the hourly chart. That actually has happened, and then we expect some pullback on the markets because market stats at over bought here, and it needs some relief after the holidays. Besides, with the news on the vaccine against the coronavirus from the Pfizer, it could make some impact on the balance, long-term balance in between the euro and the United States dollar. Why? Because providing on the vaccine, it could change the time of the recovery after the pandemic in the United States, and it could significantly decrease the number of new infections. So the balance between the recovery of two different economies in the European Union and the United States could change, and this change could fall in a favor of the United States dollar. This is a long-term story, but potentially everybody thinks about it, and investors know that, and that in particular why we see some demand for United States dollar as well. Although the first reaction was demand for risky assets, demand for crude oil, and in general for stock markets. So what does it mean? It means that in general this retracement is absolutely normal situation where we talk about bullish reversal candle on the weekly chart. If you remember, we said this is bullish reversal candle. On the weekly we expect some pullback, some retracement, and then theoretically following the pattern that has been formed on the weekly chart, it could be further upward continuation on the euro currency. So appearing of the bearish engulfing pattern stands friendly to this scenario because it suggests just deeper retracement. That we also discussed in the weekly report. This market could show this pullback. So based on this pattern, it means that we should get some kind of the ABCD pattern on the intraday charts. And retracement should be a bit lower than we have suggested initially. We thought that it should stop somewhere in this point. Bullish context here still stands valid. Trend stands bullish. We have the same bullish divergence, but mostly it is done because here market has created the new top compared to this one. And that usually necessary condition for a minimal target of the divergence if it appears. So now we could actually take it out. So for a short-term picture, you could consider hourly chart. So take a look what we have. That is our XOP. Accurately, it has been hit. Then collapse has followed. Here, as you can see, market is forming something that looks like the hand and shoulders pattern, reaching our target 79, 79.7. That's the point where we initially thought to take the long position. So if you have taken the long, now you could move stop the break even and see what will happen. Potentially, as you can see, it's easy to recognize the hand and shoulders that's forming here. And with the new information about the vaccine, so it could be something of that sort. So retracement could be a bit deeper because the demand for dollar could increase. As I said, suggesting for faster recovery of the United States. And potentially it could be a bit deeper retracement right to the 1723, next fib support. That actually agrees with the idea of the bearish engulfing pattern on the daily chart. We should get some kind of the ABCD pattern. So some chances exist that indeed market will reestablish the upper direction right from here, failing, erasing the head and shoulders and just rally up. But we do not know definitely. So currently we should keep an eye on the 1855 area, because you can see harmonically that's the top where it stands, and see what will happen. Currently it doesn't look like we should get the rally, because overall price action is choppy, slow, and mostly shows the features of the pullback, of the retracement. That's why I think that we currently should focus on our primary scenario based on the daily bearish engulfing that suggests reaching of the forming some minor pullback and taking the shape of some ABCD pattern to the downside. So our central view suggests deeper retracement somewhere to the 1725, next hip support in the shape of the ABCD pattern that we have. Moving above 1855, breaking and starting moving higher back to the top, increase the chance of the directional upward continuation without any retracement. So in this case, engulfing probably will fail. But currently we think that this scenario has less probability to happen rather than our central scenario with the deeper retracement.